Yes, you can start. You.
Good afternoon, everybody. Milagros College, IQAC, and Department of Commerce, in collaboration with Mangalore University Commerce Teachers Association, Mukta, is overwhelmed to come up with the burning issue after the 2022 budget, that is crypto taxation. Evidently, most of us always laid a backseat when it came to investing in digital currencies due to its decentralized and controversial nature. Today, more than 1,500 virtual currencies such as Bitcoin, Ethereum, Litecoin, Ripple, etc. are being traded and invested in multifold ever since the nationwide lockdown began. Today, we have come in a fairly good number to gain deep insight on this topic. And to do justice, we have a profound speaker in this field. He is Mr. C.A. Anvesh Shetty. A brief introduction of our speaker. Mr. Anvesh Shetty is a practicing chartered accountant from Mangalore. He has a recorded certificate course on blockchain for finance professionals, mainly dealing in various nuances of blockchain, covering cryptocurrencies, NFTs, decentralized financial application, and accounting of crypto assets. Presently, he is pursuing his LLB from Karnataka State Law University, PhD on GST on real estate industry, and also studying ACCA. In a nutshell, Mr. Anvesh is a dynamo, and the team is delighted to have you with us. A warm and hearty welcome to you, sir. We have with us the Secretary of Mukta for the second time in a row, who will be moderating the session for us. And he is our very own Professor Manoj Lewis. A brief introduction of Manoj, sir. Mr. Lewis is a renowned soft skill trainer, and he is the author to textbooks such as Real Estate Management, GST, Direct Tax, Retail Management, and many others. He has been the co-member in drafting the CBCS syllabus, and he is presently working as a professor at GFGC Kabul. A warm and a hearty welcome to you, sir.
Thank you.
I extend my welcome to the Mukta President, Professor Parshvanath Ajri, and the office bearers as well. Welcome to each and every one of the Mukta. A genial welcome to our Principal, Reverend Father Michael Santamayer, for his support and unending guidance. My welcome goes out to all the virtual participants of the session. I hope we all have a great learning. I now request our Principal to speak a few words.
Good evening, my dear friends. Mukta, in association with the Milagros College, IQAC cell, organizes this online training program, Crypto Taxation. First of all, I would like to thank the President of Mukta, Professor Parshvanath, and the Secretary, Professor Manoj Lewis, for giving us this opportunity and also collaborating with us. This concept, as it is said by the anchor, is a new, and it is very much at our field now. In the budget, it has been discussed and approved that this concept is going to be the main aspect of discussion in the future. So there are so many issues and there are so many misconceptions regarding this, but these experts surely will enlighten us, and especially this concept called cryptocurrency is going to be the next generation, what is called concept that is going to enlighten us all. I wish Mukta and all the participants, those who are here and the speakers, I wish all the best, and all the participants wish all the best. Let this session be a fruitful one. Let us start the beginning itself about the learning about the new concept called cryptocurrency. Thank you.
Before we proceed, I now request our moderator to share his thoughts on the issue.
Anvesh, can you make Sachin Amin from where Eva is speaking as the co-host? Sachin Amin.
Yes, I made him.
Okay. Eva, you can admit all the participants. Listening to an expert for an hour is worth reading a book on the topic for a month. A very good afternoon to all. Respected Reverend Father Michael Santamaya, the principal of Milagres College, Professor Cassin Rodriguez, the vice principal, Ms. Eva Manorama, the coordinator, Ms. Lancia, the head of the Department of Commerce, CA Anvesh Shetty, our resourceful speaker for this webinar, and dear participants. Cryptocurrency, virtual digital assets are some newly added terms in the budget dictionary. 30% taxation on virtual digital assets, 1% TDS on transactions are all that we are listening to in every television channel debate. And we see a lot of young chartered accountants, not the senior chartered accountants, coming for discussion, coming for debate. And as Father Michael very rightfully said, we are talking about the new age business or new age investments in cryptos. Government has taken a step as to taxing digital assets, but the question remains, will it be successful? I am putting a question mark in front of whatever Madam Nirmala Sitharaman did mention in our budget on 1st of February. Will the government be successful? I'm actually making a very big statement at this moment. Now, what little that I have understood out of taxation, more important for me, more than 30% taxation, I would say that 1% TDS is going to be a draconian thing, because those who wanted to hide behind, what I should say, the paperless trail, the algorithm and all that we can say, I think that 1% TDS, a new section 194S, is a step towards making the digital transactions visible to the government for taxation purpose. And also, we have heard that the upcoming ITR forms, when it comes to filing returns, will contain specific columns for cryptocurrency details as well. Profits will be taxed at 30%, but there is no set-off for losses. As a very senior tax teacher very rightfully said, people are investing, and usually when we say sale of investments, that comes under the category of capital gains. But by taxing and not giving, what I should say, a set-off, that means the government has categorized this cryptocurrency into casual income category and not in the investment category. That is a major thing that, as tax people, we need to be aware of. Also, I would like to go to the extent of saying that 30% taxation is far better than banning cryptocurrencies. This is a very, very important step that the government, has taken, because 2 weeks before the budget, everyone knew that it would be difficult times for those who are into cryptos. But I believe 30% tax is still okay, rather than going for banning of cryptos, which anyway I thought is not possible for a single government of any country alone. A lot more information is yet to be out in the public domain, because the government is still figuring out what should be the guidelines, what should be the regulations for what they have said in the budget. A lot of questions still remain unanswered, but to clarify as many doubts as possible, we have in our midst a very young and vibrant chartered accountant in CA Anvesh Shetty. And let me tell all the participants, when Madam Nirmala Sitharaman and her revenue department team was preparing the budget, and bringing in this concept of cryptos, CA Anvesh has already set up this thought almost 6 months before, that this is what is coming. So on behalf of all the participants gathered here, first of all, I'd like to salute CA Anvesh, because you are very, very proactive in your thought process. You are dealing in cryptos. You know how difficult it is going to be for the government, the kind of transactions that take place either through exchanges or peer-to-peer. And I should say, keeping my hand on my heart, if I have learned a little of cryptos, it is because of you. Though I am not an investor directly in cryptos because I believe in the traditional form of investment, but then listening to you on cryptos still makes me realize that don't invest in something that you don't understand. So no matter how much knowledge we have on cryptos, we will still remain a little, falling short as far as the knowledge is concerned. So to share with us the nitty-gritties of cryptos, it's dealing whether the government can tax it, whether the government can tax all kinds of transactions under cryptos, what cannot be taxed. I think the right person to listen to is CA Anvesh Shetty. So may I now invite our young and vibrant resourceful speaker, C. Anvesh, to make your presentation. Participants, please note, if I'm going to mute everyone now, if you have any questions that you would like to ask, please wait. Don't post your questions right away. I want you all to focus, listen to the presentation. And if there are any questions that you have, you can post it maybe at say 3:45 onwards. And we will have good 30 minutes, 25 to 30 minutes only answering all your questions. So I will try my level best to take up all the questions possible so that each participant who has joined from across the country benefits out of the words of CA Anvesh Shetty. So over to you, CA Anvesh.
Thank you, Manoj sir, for such a lovely introduction. Also, I thank Eva for reading my intro out. At the very outset, I want to thank Milagres College as well as Mukta for planning a session like this. So it is, whenever we listen or whenever we hear the term crypto, for most of us, it sounds like Greek. And we would say that, oh, Indian government is anyways going to ban, so why should I study about it? But to our surprise, government, rather than banning it, finally some sense prevailed and they said, well, if everybody is making money in crypto, why not we milk some of those gain that is made by the people? So in the 2022 budget, government started taxing cryptos and NFTs. And it is very good to see around 225 plus participants. And moreover, the faculties who are interested to understand crypto and then understand its tax impact. So it would be unfair for me to directly jump into the taxation, because if you don't understand the asset, then it is impossible to understand its taxation. So we have to understand what exactly government wants to tax. So I'll be quickly sharing my screen. So probably the explanation is going to go for around 30 minutes. And then for the next 10-15 minutes, I'll be taking you back to the taxation, what has been introduced. And then as Manu sir rightly said, we will be dwelling into the question and answers, which I'm sure we are going to have plenty today. So I'll be sharing my screen. Okay. So can you confirm whether my screen is visible? Okay. So now, what exactly government wants to tax? So I'll be writing certain things as well so that we can simplify it better. So whenever I talk about crypto, please bear my handwriting, it is not good. But so whenever I talk about crypto, we are talking about currencies. But there are basically three types of asset class, what we are talking about. The first asset class that we discuss, we call it as something called as currency token. And second asset class, what we are talking about is something called as security token. And the third asset class, what we are going to talk about is something called as utility token. It is very important to understand the distinction between these three types of tokens. So I'm going to give very simple example so that everybody follows, whether this is the first time you're attending any session in relation to cryptos. So first one is, what exactly is token? I want you to imagine any canteen, any college canteen, where you go to the counter and you hand over 50 rupees and the guy at the counter gives you one round shaped plastic coin, and that coin is nothing but token. But this token is a physical token. You can feel it, you can touch it, you can carry it, and you can transfer it. So, but token simply says it gives you a right. So now what exactly is the right that you get? Whenever I'm talking about token at the college canteen, you can carry that token, go to the kitchen, and you can just hand over that token, and the person in the kitchen will hand over one plate of rice to you. So what exactly you did? You first paid some amount of money, you got one token, you walked up to the kitchen, you gave that token to the other person, and they gave you some food. Okay, so this is a classic example of something called as utility token. So in utility token, what you get? You get some utility in return. It may be some goods or it may be some services. So in simple word, we are talking about vouchers. So whenever you go to more, and let us say you have a gift voucher, you give it to him. So it is nothing but a utility token, where in exchange of that token, in exchange of that card, you are getting some goods in return or you are getting some service in return. Okay, so there are certain cryptocurrencies which functions as utility token. So if you give that token, in return, you get certain goods or you get certain services. Okay, now what is this security token? Now, when we talk about security token, in simple word, it is shades. Okay, so now let us say Infosys issues 10,000 shades. Now it is, as a commerce faculties, it is very easy for us to understand what exactly is a share. Whenever company wants to raise investment, rather than borrowing money from the bank, it breaks down its capital into small pieces. What we call it as a share, and it is issued to the general public. So every person who has one share is entitled to certain benefits. It may be certain voting rights, or he may be entitled for some amount of dividend. Similarly, in modern days, we are having these companies, all these digital companies, instead of issuing traditional shares, what they issue is something called as security token. Now, if you have this security token, what you get, if the company makes some profit, you get certain profit share, or you get certain rights in the company. That right may include voting power as well. So whenever we are talking about crypto, sometimes we are also referring security token. And the last one is something called as currency token. Now, this is what you hear on a day-to-day basis. You have heard something called as Bitcoin, you have heard something called as Ether or Litecoin, and so many thousands of coins, which are nothing but currency tokens. Now, what is a currency token? The word that we need to focus here is a currency. Now, what is currency? In simple word, it is money. So whenever I am availing some services, whenever I am buying certain goods, instead of paying him in traditional money, that is 100 rupees, 200 rupees, I can pay him in terms of these cryptos. So if the other persons accept these tokens as currency, then it becomes currency token. Okay. So example could be Bitcoin, example could be Ether on this. So normally most of the people think that whenever we are talking about crypto, we are only talking about currency token. Answer is no. We are actually talking about currency token, security token, as well as utility token. Now here, one important thing that we need to understand is whether it is a currency token or a security token or a utility token, all these are fungible tokens. Now, you need to understand a little bit of technical words here. So exactly what do you mean by the word fungible? Fungible means which is easily exchangeable. Now I'll give an example. Let's say I have 100 rupees note with me and I give that 100 rupees note to you. And evening you return 100 rupees note to me back. Question is, maybe the note which I gave you in the morning is different. When I say different, maybe the serial number which is written in that note is different. And in the evening, the note that you're going to give it back to me, that could be different. But at the end of the day, I'll be happy because I gave you 100, you gave me 100 rupees back. So this is something called as fungible in nature. But there are certain assets that we have which are not fungible. For example, let us say I have 1 acre of land in Mangalore and you have 1 acre of land in Udupi. So if I give you my 1 acre land in Mangalore and if you give me 1 acre land in Udupi, these not are exactly the same. So when we talk about immovable property, those are not fungible assets. So those are actually a non-fungible assets. Okay. So first we understood what are these fungible tokens are. So now let us say you have some amount of money. Okay. So let us say you have 1 lakh rupees of money that you have invested. You may invest in a currency token. You may invest in a security token. You may invest in a utility token. Let us say you invested somewhere on January 1st. And on February 28th, the value of this 1 lakh rupees turns out to be, let's say, 5 lakh rupees. Because we know this entire market has a lot of fluctuations. So let's say that the value went up from 1 lakh, it went up to 5 lakh rupees. So the gain that you have made is 4 lakh rupees. So how do you compute this gain? That is 5 lakh is nothing but the sales consideration. And this 1 lakh is nothing but your cost of acquisition. So you deduct this cost of acquisition. So whatever the gain that you have made, that 4 lakh rupees, the question was, how do we tax this 4 lakh rupees? So till Finance Act 2022, sorry, Finance Bill 2022, which was introduced, there is a lot of confusion as to whether we should actually offer it for taxation. If yes, should it be offered under capital gains? Should it be offered under that is profits and gains from business or profession, or should it be offered under income from other sources? If we are going to offer, what is the tax rate should we offer it at? Should we offer it at the slab that is applicable for lottery betting and gambling, or should it be at a rate applicable to the capital asset, or should it be under the normal slab? So in this current budget, the government gave some clarity. And again, I want to stress on the word some clarity, not absolute clarity, because there are a lot of questions that are left open for the imagination of the stakeholders. But we are going to discuss what is that clarity which is given by the government. Let us discuss on these lines. So what government proposes to do is, it says this 4 lakh rupees what you have to offer it to tax at 30%. We don't care whether you offer it under capital gains. We don't care whether you offer it under PGBP, that is profits and gains from business or profession, or whether it is income from other sources. It could be any treatment that you do, but the tax rate has to be 30%, not just 30%. Along with that, there is going to be 4% of cess. Along with that, there is going to be surcharge. So this is something that you are supposed to pay on this 4 lakh rupees. Now you may say, well, I am into the business of trading in cryptos. So it is not just cost of acquisition, which is only my cost. I have one proper office space. I have pay rent on that. I have a couple of employees. I pay salary to them. I use computers. So there is a depreciation on that. So government is very clear. It says no deduction whatsoever other than cost of acquisition is going to be allowed on that. So if you say, well, I want to deduct extra 50,000 rupees, there is no deduction. So only entire 4 lakh rupees should be offered to tax. But there is one adjustment that you can do. That adjustment is, let us say that this is one of the transactions. This is the first transactions that you had. Let us say you also have the second transaction. The second transaction was you purchased another cryptocurrency for, let us say, 1 lakh rupees. But there was no market and you had to sell it for only 20,000 rupees. So this is the cost of acquisition and sale consideration is just 20,000 rupees. So here you are suffering a loss of 80,000 rupees. Question, the major question is, can this be adjusted? Answer is yes. So what is not allowed is you are not supposed to adjust this 80,000 rupees with other businesses or income from other businesses. But within the crypto business, this adjustment is possible. So deducting this 80,000 rupees of loss, you have to offer 3,20,000 rupees with 30% tax, with 4% cess, along with the surcharge. So this is the existing tax position as far as taxation of crypto is concerned. So I will take you through what has been added. So first, for government to tax anything, first thing is they have to define what this asset is. So they have defined what exactly is a virtual digital asset. So there are multiple clauses. Clause A of the finance bill actually talks about fungible tokens. So this is where I had to first explain what fungibility is. I had to explain what is a currency token, what is a security token, and what is the utility token. So let us just go through this definition, as this is an academic discussion. I want only a couple of definitions that I'll be taking you through. First, they say, what is virtual digital asset? So they say it can be an information, it could be an information or a code or a number or token. So what is the important term here that we're going to use? That is token. It can be an information or code or a number or token, not being Indian currency or a foreign currency. Okay. So if it is some country's currency, then it is not going to be a virtual digital asset. So generated through cryptographic means. So it has to be generated through either cryptographic means or otherwise by whatever name called. Now here it becomes interesting. That is, Either they provide a digital representation of value exchanged with or without consideration, with the promise or representation of having inherent value, or functions as a store of value or a unit of account, including its use in any financial transactions or investments, but not limited to investment scheme, and can be transferred, stored, or traded electronically. Now, I know the definition is a lengthy definition, but what exactly they are trying to cover here? They are simply saying that whether it is a currency token, whether it is a utility token, whether it is a security token, we are going to tax all three of this. Okay, so where are they saying that it is a currency token, or where are they saying it is a utility token, or where are they saying whether it is a security token? I want you to reread this definition again and again and again. What are they referring is they're referring these three types of tokens. So whatever you do with these three types of token, it fits under the definition of virtual digital asset. So we spoke about what is fungible. So fungibility is taxed here. Then comes the question, what if certain assets are non-fungible? So I gave an example of what non-fungible asset is. If I have 1 acre of land in Mangalore, that is not equivalent to your 1 acre of land in Udupi. Similarly, if I have one diamond with me, so members must be aware that diamonds are very unique assets. So every diamond has a different shape, different cut, different clarity. So my one piece of diamond is exactly not similar to your one piece of diamond. Similarly, if I have one painting of Mona Lisa and you have one painting of, let us say, Picasso, our both paintings are not exactly exchangeable. Okay, so in blockchain, other than tokens, we also see certain assets being exchanged. Let us say I give you a digital copy of Mona Lisa and you give me a digital copy of Picasso's painting. So what exactly are we exchanging? We are not exchanging a token which is fungible, but we are exchanging a token which are non-fungible. So government intends to tax even those non-fungible tokens as well. So that is where in the definition of virtual digital asset, they have also included a non-fungible token as well. So now, if I am actually selling my Mona Lisa painting, and if you pay me 1 crore rupees for that, what I transferred is a non-fungible token, which attracts tax at 30% tax slab. So this is a very simple discussion on what government intends to tax. But one beautiful point to note here is, whenever they're talking about fungible tokens, any fungible tokens are going to be taxed at 30%. But whenever we are talking about non-fungible tokens, it is going to be taxed only if central government notifies that asset. Okay, so unless central government issues a notification calling my painting as a NFT, it does not come under the definition of virtual digital asset. I'm not saying there is no tax on that. All that I'm saying is it is not fitting under the definition of non-fungible tokens. Then they have kept the definition open because we know that there are a lot of changes that is happening in the digital world. There is metaverse, there is a lot of new asset class that are coming in. So say definition, it simply says it could be any other digital asset which a central government may by notification prescribe. So they don't have to bring in another law separately for this purpose. Now, all things said and done, always the first question is, what is this cryptocurrency? How does it actually function in real life? So I want to show you how does it actually look. I'll be taking you through the browser. So there is one website called as blockchain. So all that I'm supposed to type is Blockchain Explorer in my Google, and I'll come down to one page, something called as blockchain.com, which I advise the members to go through right after this class, not during this class. So here, if you come and see, there are a lot of cryptocurrencies that you can see. There is Bitcoin, there is Ether, there is Litecoin, Cardano, Ripple, and so many other cryptos, which could be, again, I'm saying, which could be currency tokens or utility token or security tokens. So when I click on Bitcoin, so there is one screen that is visible to me now. So if members can see here, these are the different blocks that we see. So what I'm going to do is I'm going to open one of the blocks. Now again, what are these blocks? Blocks basically means the series of books. Okay, so the first book, that book may have 100 transaction. I may have the second book, that book may have 100 transaction. So what I do is I keep one book and number it as book 1 or block 1. Above it, I'm going to keep another book, gonna name it as block 2. Above it, I'm going to keep another book, gonna name it as block 3. Similarly, I'm going to keep one book upon another, on another and another. So now the book has become the heap of books. So there are around 7,22,175 books of blockchain which have been kept one upon another. Now again, it is not a physical book that is kept, it is a virtual copy of the books that we see. So when I click on that book, that is when I click on that number, you see a lot of transactions here. Okay, so in every book, normally being a commerce faculties, we know that in one book, it is not just one transaction. There are multiple transactions that I can write in that book. So these are the transactions that is there in that one book. Okay, now I want to open one transaction and show it to you. How does this actually look like? So if you see here, the output total. So here, if you see, there is something called as hash value. There is something called as output total. And then there is something called as output total in USD. So first output total is in terms of cryptocurrency. Next column is output total in terms of US dollars. And for this transaction, what is the transaction fees in terms of USD as well? And certain size that has been given. So let me just open one transaction to show you how exactly it functions. Okay. So here, if you see, now this one person, okay, I want you to focus on this number. That is, you can see there is a sender and then there is a recipient. So now sender is sending 4.68. So here, this is the transaction that looks like. So here, if you see, there is a sender and then there is a recipient. But can you actually see the name of this sender or can you actually see the name of the recipient? No, it is some random digit. And it is a one-way algorithm. That means you cannot find out actual name of these parties, whoever is doing this transaction. Now, this is very important from taxation perspective. So you actually cannot say who these parties are, but you can see the transaction. You don't know whether this person is in India or whether this person is in China, USA, Australia. You know nothing about them. All you can do is you can see the transaction where a person is actually sending 4.68 Bitcoin to 3 parties. Now again, it is not actually 3 parties. If you look into this transaction, it is as simple as, let's say I take a rickshaw ride and I have 100 rupees note with me, but the rickshaw fellow says it is 60 is the rickshaw fare. So what I do is I give him 100 rupees. He deducts 60 rupees and gives 40 rupees back to me. Similarly, when you look at this transaction, what exactly is happening here? One person is actually sending 4.68966360 BTC to 2 parties. That is 0.0045 so and so. And for another person, it is 0.019 so and so. And then he is getting a change of this amount back to his account. So this is one transaction. This is one transaction. So there is a sender and then there is a recipient. So what government intends to do here is they want to tax this transaction. So they say, whatever the price in which I'm giving this currency minus my cost of acquisition when I actually purchase this currency, whatever the gain that remains, I have to offer it at 30% taxation. So the first question that comes is, how will government get to know that this transaction actually took place? So whenever, let us say, I am selling my land to you. Now this, though it is a private transaction, is not actually very much private transaction because I have to go to sub-registrar office where I have to sign in sitting in front of the sub-registrar where he will make changes in his books. So if I don't give this information to the government, at least sub-registrar will give information to the government. So government will get to know that I sold the land to somebody else because of that. Or let us say that I sell 1 acre of land to you and you transfer 50 lakh rupees to me. You don't give it in cash, but you deposit in my bank. So even if I don't tell the government saying that I sold the land, my bank will send one statement of financial transaction to the government where they will get to know that I have received 50 lakh rupees. So the very moot question that still remains is how government is going to capture this particular transaction. Is there a way that government gets to know every time a transaction happens? Answer is absolutely no. Because in every crypto transactions are pseudonymous. It is not anonymous, it is pseudonymous. So what exactly is pseudonymous? That means you can see the transaction is happening, but you can't see which transaction, who is doing the transaction. You actually can see the value also, only the name of the parties you can't see. But if you're doing transaction with the help of exchanges, so we are all aware of there are exchanges like BSC, NSE for the stocks, the shares. Similarly, there are a couple of exchanges for cryptocurrencies as well. For example, there is WazirX, there is Coinbase, and there are some other exchanges as well. If you're transacting through these exchanges, what these exchanges do is they collect your information, they collect your Aadhaar, they collect your PAN, and they will keep track of all the payments, all the transaction that is happening, and at the end of the year, they will send details to the government. So if you're thinking that, well, these transactions are anyway pseudonymous, government will not get to know, that is not true if you're dealing through exchanges, because exchanges will give your information to the government. Then comes the question, well, if I'm not using exchanges, but I'm doing peer-to-peer transaction. Peer-to-peer transaction simply means I am giving one Bitcoin that I have to somebody else. Okay, now when I'm giving it to somebody else, there are two ways I can receive the money. If I receive the money in bank, just like olden days, bank will communicate with the income tax department stating that some money has been received. But if I take money in cash, so this particular transaction is something which is literally impossible for the government to trace. Now, so that is as far as section 115 BBH is concerned, which intends to tax these crypto transactions at 30% tax slab. So this is the first change that has been introduced by the government in relation to cryptocurrencies. Next. So I believe that this part is clear. What exactly is a virtual digital asset, what government wants to define. First, they're talking about a fungible token that are easily exchangeable, whether it is used for the currency purpose, security purpose, utility purpose, everything is taxed at 30%. Second is an NFT. Even these NFTs are also taxed at straight 30%. But the beauty of this is government has to notify that this is the NFT that we want to tax. Now the second, now a quick overview of what 115 BBH says is, first one is the transfer will be taxed at flat 30%. So whenever I talk about transfer, Section 2, Clause 47 of Income Tax Act defines what a transfer is. So it says if there is a sale or if there is a exchange. So both sale as well as exchange is covered under the definition of transfer. Now, so if I'm actually giving one Bitcoin, but not actually taking money, because if the moment I take money, it becomes sale. But if I give my Bitcoin, but instead I get one NFT in return, or instead I get one Ether, one more cryptocurrency in return, then it becomes exchange. Now, whether it really becomes exchange, that again is something debatable, because the word exchange is slightly different from the term barter. So if your faculties of GST, then you would agree with me that Section 7, which defines the term supply, says any forms of supply such as sale, barter, exchange. So there is a very specific meaning which is given to barter, and the meaning of barter is different from exchange. An example is barter simply means I give my car, you give your scooter. That is a barter exchange. But when I say exchange, it is slightly different, where I say I am going to, you give me your old Mixie along with 5,000 rupees. I'm going to give you a new Mixie. So this is an exchange. So exchange basically involves little portion in money as well. So if it is purely goods to goods, whether it can be covered under the definition of exchange and income tax, that is going to be a debatable issue, for which we have to wait for certain circulars or clarifications by the government. But till then, it is safe to offer it for tax. Second point here, as far as 115 BBH is concerned, any loss which you incur during a transaction in virtual digital asset, it will not be allowed to set off against any other income, that is PGBP income or a capital gain income, other income. You can't set it off, nor further, no deduction of expenses other than cost of acquisition, you can't deduct it. And again, there is no carry forward of losses. So normally, even in a speculation loss, I can carry it forward for 4 next years. Any other losses, I can carry it for 8 or depending on the type of loss, I can carry it forward. But when you talk about crypto losses, we cannot carry it forward. So excess planning is required on year one itself as to how do I offer it for taxation. Now, the second change is in relation to gift. So we know that whenever we receive gift, certain gifts are not taxable. So maybe a gift from a relative is not taxable, gift received during the occasion of a wedding is not taxable, or gift received by way of a will is not taxable. So there are certain gifts which are not taxable. But if I'm going to receive a gift from a stranger or from a person who is not related to me, then that gift I need to offer it for tax. So in order to provide for taxation of such receipt, in terms of crypto, government introduced or amended a provision, that is 1556 subsection 2 clause X, where they said, if I receive a virtual digital asset as a gift, the recipient has to offer it for tax. I'll give a simple example. Let us say somebody gives me 1 ether, the value of which, let us say, is 2,30,000 rupees today. So I ask the question whether that person is my relative. If the answer is no, whether it is in the occasion of my wedding or a couple of other situations where gift is not taxable, I have to offer this 2,30,000 rupees or 1 ether for tax. So this is as far as section 56 2X is concerned. Now again the question is, I'll offer it for tax, but at what rate? Should I offer it at 30%? Answer is no. Because if you look at 115 BBH, it only says only when I transfer, only when I transfer, only when I sell, only when I exchange it, I have to offer it under 115 BBH. So, but when I'm receiving it, I'm not transferring it to anybody. I'm just receiving it. So I don't have to offer it at 115 BBH. The normal tax rates that becomes applicable. So this is something I want all the participants to keep in their mind. So when you receive it, even if it is a gift, 115 BBH will come to picture. Now the most important question here is, well, somebody gives me 1 ether or 1 cryptocurrency. How do I arrive the value of it? Because morning the value could be 2,30,000. By evening the value could be 30,000 rupees. Because crypto being a volatile market, the value can keep fluctuating. So as on date, there is no clear instruction or a clear clarification which is given by the government. We are waiting for this. Maybe in a month or two, government may realize that valuation is an important part in the crypto, and they may come with certain clarification on this. All that I want to say is, if you receive it as a gift, it will be taxed in the hands of the recipient. Now, the third change in income tax is, I told you that whenever you look at the transaction, those are pseudonymous in nature. That means government cannot find out whether these transactions are actually entered into by the people who are liable to pay tax. So what they said is, they shifted the liability to you. Now they are saying that we are going to introduce one section called as 194S. So this is a section for TDS on all these virtual digital assets, basically cryptocurrencies. So what are they saying there? Let us take one very simple example. Let us say there is Mr. A who has 1 Bitcoin with him. Okay, so he is transferring this to B. So B is actually paying him, let us say 30 lakh rupees. So it is B who is paying 30 lakh rupees to A. So now what government says? Government says section 194S is proposed to be introduced where the person responsible for paying. So now who is the person who is responsible for paying? In this situation, Mr. B is the person who is responsible for paying any sum to an Indian resident. So the seller should be an Indian resident. So you need to ask whether he is a resident or a non-resident. If he is a non-resident, then 194S is not applicable. It doesn't mean that there is no TDS. Instead of 194S, there is one more section, that is section 195 becomes applicable, where TDS should be deducted at the rate of 30%. But if he is a resident, then TDS should be deducted at the rate of 1%. But one very interesting point to note here is, you will not get to know who your recipient is. That is the beauty of all these cryptocurrency transactions, where you exactly don't know who the buyer is, because again, it is a pseudonymous transaction. where there is an offer which is put in some application where somebody says, I want to buy it for 30 lakh rupees. You say, okay, the money comes to you where you don't even know who the buyer is. So there is a complication as to how do you find out who the recipient is, because this is the global market that we are talking about. So first, who has to deduct TDS? The person responsible for paying to an Indian resident should deduct TDS. So if it is going to be non-resident, then 194S is not applicable. Next comes the question as to when should you deduct TDS? So the very interesting point here is, now here in this example, we know that A is the seller and B is the buyer. So B has to deduct TDS. But let me make this example a little tricky. So let us say instead of this 30 lakh rupees, let us say B has to give 15 ethers. Now this is as simple as exchanging one token in exchange of another token. It is like I will give you one hotel's token, you give me another hotel's lunch token. So it is more of a barter transaction that happens here. In this scenario, who has to deduct TDS? Whether both has to deduct TDS, answer is yes. So even A has to deduct TDS on B and B has to deduct TDS on A. At what rate? At 1%, and then they are supposed to file the return. But government has given certain relaxation also, where they say if what you're actually buying, if it is less than 50,000 rupees in the whole of the year, maybe you just want to see how these cryptos function. So you just want to put 5,000 rupees, you just want to put 25,000 rupees in that, you don't have to deduct TDS. But in the whole of the year, if you're making any purchase put together more than 50,000 rupees, then yes, you are liable to deduct TDS under section 194S. But that is when we are talking about a specified persons. Who are specified persons? Like a normal individual like you and me, whose annual turnover in case of a business does not exceed 1 crore rupees, or as a professional whose turnover does not exceed 50 lakh rupees, I can buy cryptos worth rupees 50,000 rupees without deducting TDS. But for anybody else, let's say a large business group, then they don't get this luxury of 50,000 rupees. Up to 10,000 rupees in the whole of the year, they don't have to deduct. But if they're purchasing a crypto more than 10,000 rupees or NFT more than 10,000 rupees, then they are supposed to deduct TDS at 1%. Also, the government has made it very clear that if you're deducting TDS under 194S, then you don't have to deduct TDS or TCS under any of the sections under Income Tax Act. For example, if you're deducting TDS under 194O, but also you are in exchange you're getting crypto, then you are supposed to deduct only under 194S. Now, 1 second. Okay. So that is as far as even TDS deductions are concerned. Now again, there is a very easy challenge for you to fill in. It is not a very difficult challenge like other 194A what we talk about. It is a very simple procedure where government wants it to make it very easy for the deductor to deduct TDS and report it to the government. So these are the changes that has been introduced in the budget. So now I want us to go through the question answer sessions. Again, there are certain explanations to be given for that. But if you have any questions still what we discussed now, or any other questions as far as taxability is concerned, this is the time you should unmute yourself, or I leave it to Manoj sir to decide how this question should be posted.
Thank you, Anvesh, for clarifying, as to what is TDS and the kind of, about cryptocurrency, about TDS and all. So if there is any questions from the participants right now, you can put it in the chat box. You're free to do so. Anything on whatever Anvesh has spoken. Chat box is on now, so you can put the questions in the chat box. Okay, Anvesh, there is a question. This is actually a basic question from Priyanka. She's asking, how come cryptocurrencies have so much of value? Obviously, demand and supply. More than that. Anvesh, go ahead.
The thing is, now when in the year 2000 and around 2009, 2010, when the concept of this cryptocurrencies was introduced, all that people wanted is why should we depend on a government, or why should we depend on a trusted third party to facilitate our transactions? I'll give a very simple example. I have a cousin who is pursuing his education somewhere in US. So now every month for him to meet his living expense there, I have to send, I keep sending him some amount of money. Let's say I'm sending him 1 lakh rupees. Now, I have money here, but how do I send the money to him? The government has framed so much of laws. There are so much of FEMA regulations which I need to follow. I don't have any issues in following those regulations, but as per regulations, I have to go through authorized banking channels. Now, for this, my bank will charge me around 3%, that is 3,000 rupees. His bank there is going to charge around 2%, so around 2,000 rupees. So if I try to transfer 1 lakh rupees, 5,000 rupees gets deducted just because of banking channels. So people had a question amongst themselves as to why should we depend on a third party for me to transfer my asset to somebody else? Why can't we people trust each other and be able to exchange our assets? So that is where the concept of blockchain started, saying that, well, we will only maintain a ledger. Let us not depend on government. Let us not depend on any third party. We are people, like thousands and lakhs of people. We are only maintaining our ledgers. We are recording each and every transaction. I showed you one blockchain, one transaction. So that exact transaction is recorded by millions of people. So here we are removing these intermediaries. So that is where this the blockchain concepts came into picture. But the funny part there is, what they wanted to do is they wanted to bring in a currency in which we can send money easily. But what happened is people misunderstood this currency and people started treating this currency as investments. So you see, I'm sure members would agree with me that if I have 10,000 rupees with me today, and if I just keep it in my pocket without reinvesting, and if I keep it in my pocket for next 10 years, the intrinsic value or the actual value of this 10,000 rupees, the purchasing power of this 10,000 rupees would fall substantially. But when we talk about cryptocurrency, it is going against all the principle of economics, where people are just buying the currency without investing. They're just holding with themselves, hoping that the price of this currency will go up. Now, sooner or later, economics will come back where the prices are going to definitely crash. So this, again, session is not an investment advice. This is just for us understanding as to how do we tax these cryptos. But the question is why the price of these assets are going up, because of mad speculation, where people are just putting their money in, and where the supply is restricted. That is where a lot of people are chasing a limited asset. So the prices are going up.
Yes, thank you, Anvesh. There are a few questions which I am trying to answer in the chat box. Is TDS mandatory? Yes, it is. If you are in India, then I have invested 11,000. Am I liable to pay tax? Is Ravindra sir's question. Yes, you are liable to pay tax, 1% on the transaction value, 30% on your profit. But there are certain issues. There is one question that people are asking right now. There is no question of setup. Suppose if I invest in two different cryptos. So concept of setup is, from another head of income that we are talking about. So loss in one cryptos, can I set up from the profit from another crypto? Yes.
Yes,
okay.
Yes, because it is falling under the same asset class.
Correct.
That adjustment is possible.
Yes, but not from
adjustment is not possible.
But not from the other heads of income as we are talking. Yes.
Not even other head of income, not even other income class. For example,
all right,
I may deal in cryptos. It could be my business income. I can very much offer it as my business income, but I may have another business income. So this too, I'm not allowed to set off.
Okay. Yes. If I don't fall under the tax slab, and let us say I get 100 rupees profit from crypto, whether I need to pay tax, whether I need to file returns for that 100 rupees profit?
Yes. So here, the basic exemption limit is not applicable. If you look at 115 BBH, it begins with notwithstanding anything containing any other. So it is a notwithstanding provision. It says for even this 100 rupees, pay 30 rupees as tax. And other income, you don't have to offer it.
Okay, there is an interesting question actually from Mr. Mallikarjuna, but question is incomplete. He says, if investment is made regular and more, in which head of income need to be computed and filed? So point is simple, sir. Only when you sell, you will earn profit. At that time, you're liable to pay tax. So when you buy, there is no point in that. Anvesh, you can add that something.
Yes, I want to add one point here. The question is whether should I offer it under capital gains or should I offer it under PGBP? So if you look at capital gains, there is a taxable event. So there has to be a capital asset plus there has to be a transfer. Now, when you look at the definition of capital asset under section 2 clause 47, it's under section 2 clause 14, which defines capital asset.
Yeah.
It simply says capital assets exclude stock in trade. So now, what is stock in trade? It is up to the SSEs to decide. So if I'm dealing in a particular asset on a regular basis, then it becomes my stock in trade. So if it is my stock in trade, it can't be capital asset. If it is not a capital asset, then it can't be capital gain. So if I'm dealing on it regularly, in my books, I treat it as a stock or inventory, then the income of which I have to surely offer under PGBP. So once I offer it under PGBP, whether I offer it under PGBP or capital gains does not matter. The tax of 30% is applicable. But the question still remains, if I am going to treat it under capital asset, do I get cost of acquisition is something that I can deduct, but do I get to index it? Whether I get the benefit of indexation is a question. I don't see any changes in income tax which stops me from claiming indexation. So to my mind and to my understanding, as on date, if you're holding it for more than 3 years, you can very much claim indexation. But if you're going to treat it as inventory, then indexation benefit is not available. Only cost of acquisition is something that you can deduct.
Okay. Sandeep sir's question. Do you think cryptocurrency is the safest avenue for investment? I think everyone is finding an answer for that. No one has a ready answer. Anvesh, your thoughts?
It is, as long as I'm not going to park more than 2% of my portfolio, I'd say it is the safest for your investment portfolio. But anything more than that, it is a risky aspect.
Correct. So you mean to say it is always that you allocate, diversify. So cryptos can be brought in as a diversification tool, but not actually, cannot say whether it is safe all by itself. Malini's question, what's your opinion on charging 30% tax? I would answer that charging 30% tax is better than banning cryptocurrency. That is what I would say, though it was not done earlier, because government is finding ways to, add revenue to its kitty. So possibly they're finding it one way and working out ways.
But I want to add on this point, sir, if I may. So here, if your question is whether it was not taxed earlier, now interestingly, a week back, the CBDT chairman came up with a clarification stating that cryptos are not only taxable from 1/4/2022 onwards, anything that you earned before 1/4/22 also is taxable, which again, now whenever we look at the scheme of taxation,
retrospect,
it simply says anything that is income, every income is taxable, otherwise it is exempt. Every capital receipt is exempt, otherwise it is specifically taxable. That is to say, if in your books, if you have shown it as sale of cryptocurrency and under PGBP you are calculating it, even before 1/4/22 it is taxed at the normal rates. But if you are treating it as a capital asset, then I am very much doubtful as to whether it was taxed before 1/4/22. But if it is a revenue asset, it will fall under the tax slab before 1/4/22 as well.
Okay. Which country other than India deducts TDS? I don't think anyone has thought of bringing cryptos in the tax bracket.
Other countries, I want to add it here, sir.
Yeah.
TDS is not there in other countries, but when we talk about Australia, before 4 years, they made a separate income tax return form where you're supposed to disclose your crypto assets. US before 3 years changed their income tax return form where you're supposed to disclose your crypto assets. So there are so many countries where the income tax return specifically asks you to disclose your crypto holdings. So it is a welcome move in India that at least from current year onwards, as of now, they are not specified the return forms, but from this year onwards, there will be a space where you have to disclose your crypto holdings. MCA came up with a circular in the last year where they said companies holding crypto assets should give a separate disclosure in the financial statements, but that was applicable only to the companies. But now this change is being implemented for across the SSE. So everybody has to disclose it in the returns.
Okay, I think so. You say that companies have invested in cryptos.
Yes.
It is only for the sake of information that the government was, looking at companies investing in cryptos.
Yes.
Okay. Okay. Shall we now consider crypto as legalized in India?
No. Now, legality is something very different. So there is a very famous judgment of Dr. T.A. Qureshi. So where what used to happen is this doctor would sell certain drugs. Now there was some income tax raid and all his income was seized, and income tax department has got nothing to do with the legality of the source of your income. Whether you're earning by taking supari and killing people, income tax department will be more than happy to take it for taxation. You may say supari is my business, I want to offer it under PGPP. They will not have any problem. They will take it for taxation. Question is whether it is legalized. No. Just bringing a charging section under income tax does not legalize anything. This is just an attempt to regulate it. Because what happened is, in the year 2018, when RBI came up with the circular banning the exchanges or banning the banks to deal with these exchanges, there was one association, that is Internet Mobile Association, which actually filed a case in Supreme Court, where a Supreme Court gave a judgment saying that we agree that RBI is the sole authority to decide how monetary decision should be taken in the country, but Constitution of India under Article 91G guarantees any person in India can do the business with reasonable restrictions. So reasonable restriction simply means you can take KYC documents, you can take all the anti-money laundering measures, but straight away going and banning currency is not the right option. It is for the government to decide. So government actually came up with a crypto ban bill in 2019. Because of COVID, they did not pass it. But can we see a government going ahead and saying that we want to ban certain types of currencies? Yes, definitely. That may come. Maybe they may say we want to ban all the currency tokens, but security token and utility token, we don't want to ban it. Or NFT, we don't want to ban it. But and government can still do it? Answer is yes. So government, has it legalized it? No, they have not legalized it.
Okay. In connection to question number 3, do other countries tax crypto? Should we pay tax at both places? I think India is only the first country, I believe so.
No, there are many countries which are already taxing cryptos. There is US which is taxing cryptos. There is Australia which is taxing cryptos, which are already the developed economies. Almost all the countries are taxing cryptos. So if you pay, so now again, in cryptos, there are a lot of practical difficulties that actually comes. Because that asset is something that you can't see, and asset does not have a location. Now, if I say that I have 1 acre of land in Mangalore, I know that land is in India. If I say I have 1 acre of land in US, I know it is in US beyond Indian jurisdiction. But if I say I have 1 Bitcoin, there is no jurisdiction for that. So if I go to Bangkok and in there I buy 1 Bitcoin, then and I come back, then nobody knows whether that 1 Bitcoin, whether it is there in Bangkok or whether it is there in India. It is there in my mind. So there are a lot of practical difficulties. So that is where I said government has given only some clarifications, but not all clarification. So that we will see people, what they will be doing is, they will travel outside India, buy crypto there, sell there, come back to India. Right. Now again, if they become resident, they obviously have to offer it for taxation. Because they are going to hunt for those places where India has a double taxation avoidance agreement, and they are going to deal in crypto in those current countries, and then they're going to come back to India to escape from taxes. So this is going to be just like how we have a medical tourism, we are going to have a crypto tourism in the days to come. If there are young faculties, you can think of a business on similar lines to offer something called as crypto tourism in the days to come.
Yes, two quick questions, Anvesh, then I think you can continue. One is, do you think there will be some amendments in the GST law moving further? Because you said it is not yet legalized. So on account of cryptos, do you believe that, as a goods or a service, do you foresee this?
Now this question I've been tinkering over a couple of years as to why there should not be a GST on these crypto transactions, because when we talk about crypto, we are actually talking about software products. So right. Though it is intangible, it has all the characteristic of goods. It is not a service. Normally people have a tendency to think if it is not visible, then it is a service. Now there are a lot of Supreme Court judgment also on that regard. If I can completely transfer the risk and reward, then it becomes goods. So if I have a Bitcoin with me, and if I can completely transfer my custody into that of your custody, then it is, though it is an intangible product, it is goods. So now when we look at the GST definition of what is a goods, when you look at section 2, clause 52, it says goods means every kind of movable property other than two things, money and securities.
Correct.
So when we look at the definition of money, it again simply means something which is recognized by the government of India. As on date, nothing is recognized. No crypto is recognized as money in India.
Correct.
Whether it is a security, again, when we look at the definition under SCARA, that is Securities Regulation, Contracts and Regulations Act, the Commodities and Regulations Act, there also they have not defined that these cryptos fall under the definition of securities. So cryptos being goods, which is not money, not securities, not even an actionable claim, because for something to be an actionable claim, there has to be a right that should exist. In crypto, there is no right that you have, whether it is the right in rem or right in personam, that you don't have it. You can't take anybody to the court. So that being the case, it is not money, it is not security, it is not actionable claim. I very much feel that it should fall under the GST net.
Okay.
Now, if it is under the GST net, what is going to be the classification? It is going to be a residuary classification where you should operate at 18% tax slave, because that is a residuary tax rate what is applicable. Only difference what you can take is what is the place of supply. Now, when both, now once this TDS position comes into picture, where government can figure out that, okay, the seller and buyer both are in India, then I don't see any provision that saves from the dealers in crypto from GST. So they have to offer under GST, but again, as of now, government is very silent on that. Couple of years down the line, they will say retrospectively you have to pay tax on all the crypto transactions. That is possible.
Okay, Anish, one more question I have. When we go through the definition of virtual digital asset, 247A, there is a mention of, the word generated through cryptographic mean or otherwise. When we say generated, do you think the people who mine these cryptos are also in the, within the tax bracket? And second, any idea whether there are Indian miners? Because if there are miners abroad, definitely they are not liable to pay TDS or any other things. So do you think if there are Indian miners, they are also in this bracket because they are the people who generate these cryptos, not just the buyer and the seller? If we go to that, yeah. Third sentence, not being Indian currency, foreign currency, generated through, yes.
Oh,
this
so
word, right?
Here, what are they referring? They are referring to virtual digital asset. So here they are defining asset. How do you create this asset?
Correct.
You can create this asset by cryptographic means or some other means. So they have opened it saying that other means. So they are saying how this asset comes to life. But now we are talking about taxation. Now, whenever we are talking about taxability, we are talking about 115 BBH. 115 BBH gets attracted only when I transfer it.
Correct.
I should transfer it. So in mining, what happens is I am not transferring it. I am just receiving it. So I am on the recipient side. So 115 BBH is not applicable at that time. A simple example would be, let us say that I am just an accountant. And for my accounting services, instead of being paid in terms of money, somebody pays me 10 coins. So when I receive this 10 coin, I am not transferring this coin. I'm just receiving this 10 coin. So I have to offer it for taxation under my profession. I will say accounting is my profession, for which I have received this 10 coins, the actual value of which is, let us say, 2 lakh rupees. So it is 20 lakh rupees. At normal tax slab, I will offer it. 115 BBH is not applicable. But when I transfer this to somebody else, let us say when I received it, the value was 2 lakh per each of these tokens. When I'm transferring it, it becomes 2,50,000. Only that 50,000 I have to offer it for tax.
Okay. One last question, Anvesh. This, all experts are talking because there is no regulation right now. I may hold 2 different cryptos in 2 different exchanges. Suppose if I'm transferring from one exchange to another exchange, means I am moving from one exchange to another, I am selling it to myself. Is 1% TDS applicable on that transaction?
No. For us to look into, whenever we look at 194S or any TDS provision, first thing we need to understand is the concept of mutuality. Okay. The concept of mutuality simply says that there has to be for something to be recognized as one person is actually paying to another person, there has to be 2 persons. So if I'm just
taking it from one bank account and keeping it another bank account, I'm not actually giving to somebody else. I don't have to deduct TDS. Similarly, from one exchange, maybe from a cold wallet, I transfer to hot wallet, or from one hot wallet, I transfer money to another hot wallet. As long as I am the individual person who is holding this, there is no implication of TDS because there is no second party which is involved in this picture.
Correct. Okay. Yeah, I think you can go ahead, Anvesh, with your.
Yes. Okay. So, okay. So there is one question: what is the difference between crypto tax and a normal tax? No, see, there is nothing called as a crypto tax as it is concerned. Simply put, government treats certain incomes as special incomes. For example, let us say you won 1 crore rupees out of gambling. Though you may say gambling is my business, though you may say I'm a professional gambler, government says we don't care how you earn this gambling income. As far as that gambling is concerned, we have a special affection. You have to pay tax at 30%. Similarly, government is equating crypto transaction gains as is it equal to the gambling gains. So that is where they're taxing at a higher rate. So that is just one section that has been added. In income tax, we find numerous sections where they tax it at 30%, other types of incomes.
Okay.
When RBI is planning its crypto, any clue? So there is something called as CBDC, that is some central bank digital currency that is awaited. But again, it is for a very different purpose because for the people to see, for the people to have a better access to all the issues that is made by the RBI. So we maybe it is 4 or 5 years down the line, we will be able to see CBDC, not earlier than that. Other currencies, for example, China, have already come up with their central CBDC, central currency. So countries like Germany is planning on coming up with their central bank currencies. So we may see these central bank currencies in the near future. But one thing that I want members to understand is this is not going to be a replacement for the existing rupees that we have today. You will not be going and purchasing 1 kg of banana and opening your phone pay and paying through CBDC. This is for a very different purpose. This is not an alternative to regular currency.
Anvesh, can you say that by RBI coming out with a digital currency, the step has been taken for India to move from less cash to cashless economy? One more step.
Yes. Correct. It is to do with more of accountability and transparency because nowadays we don't know. We have to wait for the reports. We have to wait for the quarterly reports for us to understand how much RBI has issued, how much RBI has raised money from the banks. So whenever they move to the CBDC environment, where any person, just how I showed a blockchain where anybody can go and see the transactions, even we can go and see those transactions. But it is going to be slightly different from the existing cryptocurrencies. It is not going to be a decentralized one. RBI is going to be the sole authority to issue those currency, but they will select a couple of parties who can add more and more blocks into this blockchain.
Yeah.
Yes. So can you share this PPT? Yes, of course. Okay. Is any company having security crypto or planning? Yes. So now this is a very interesting question. Now, what exactly is this security crypto or security token? See, now as an Indian, I know that whenever a company comes up with an IPO, I can go ahead and subscribe to that IPO and I can be a shareholder in that company. But what if there is a company which wants to come up in Brazil, which wants to come up in France? Can I invest? No, there are a lot of FEMA regulations. There are a lot of other regulations which prevents me from directly investing money in those companies. So that is where we have something called as a new type of companies, which I advise the members to go and search later, something called as DAO, that is DAO, that is Decentralized Autonomous Organizations, which actually float a product. And initially they said, maybe let us say that I want to start a gaming company. And the developers are there, one from India, one from China, one from Japan, one from Australia. So there are a group of people who wants to develop this game. So we just float our idea in an online marketplace saying that this is our idea. If you want to buy this is 1 lakh coins for 10 rupees each. How much ever you want, you can keep purchasing it and you will be given with these coins. So now once I come up with this game, entire revenue will not directly come to me or not to these developers. It will come to one crypto account only, where automatically money, the profit share will be paid to the people who actually have those security tokens. It is a decentralized company, decentralized economy that we are talking about. To be very honest, when I started reading it for the very first time, I felt like some, it is of 200, 300 years ahead what we are reading, but maybe 10, 20 years down the line, this is going to be a reality. So there are DAOs, DAO is something that I wish members to see in future. Okay, fine. So now the thing that is what is expected out of now here. Now, though they have given the definition of virtual digital assets, there are certain assets which are a lot of confusion as to see, there is something called as virtual real estate that has come into picture, where they say that you can be here. So they are creating some virtual galaxy. Now again, virtual galaxy. So they'll create some virtual planet and they will say, I want to sell 1 acre of land on that planet. Now, what exactly it is, even it is very difficult for me to understand it. So whether all those transactions, whether do they fit under the definition of virtual digital asset, whether they fit under the definition of NFT, it is just for us to wait and watch for the for us in the future. So again, set of it is a very difficult or unfair thing done by the government, saying that we will not allow you to carry forward this loss. But one beautiful aspect is there is no deeming fiction that has been introduced here. So what is this deeming fiction? Let us say that actual value of the land is 50 lakh rupees, but if I transfer it for 30 lakh rupees for the purpose of taxation, as per section 50C or as per 43CA, I have to offer entire 50 lakh rupees. I can't offer 30 lakh rupees for taxation because there is income tax provision which says we will deem the value to be 50 lakh rupees, though you are taking less money. But now the question is, what if I transfer 1 Bitcoin, the value of which is actually 50 lakh rupees for 50 rupees? So whether the difference of 49 lakh 99,000 so and so, will it be offered for tax? As of now, there is no provision to tax that deeming thing. So people may involve in those practices where they are going to keep the consideration very less in white and have a lot of money being paid in black to escape from the taxation. We have to wait for the government's clarification on this regard. Then how this cost of acquisition that has to be computed. Now they say only the money that you actually pay will be treated as cost of acquisition. But what if I am a miner? So I actually generate the currency. So I don't actually pay money and get the currencies. So what is going to be my cost of acquisition? Because if I go and see the definition of cost of acquisition, my mining cost, my infrastructure cost, no cost I can claim it. So that is something that government has to fix. And then from what date it is going to be applicable? Normally we feel taxation regime, unless it is specifically told it is retrospective, it has to be prospective. So it should be applicable only after 1/4/22. But after the CBDT chairman's clarification, there is a question in people's mind whether it should be offered to tax even before. So I personally feel that it is you have a good chance of not offering it and still getting away with it, because the tax is not very clear on the taxability of crypto assets. There is no proper valuation rules, as I told earlier. If it is given as a gift, what value do you take it as? Do you take it as the morning value, afternoon value, evening value, opening value, closing value? There is nothing on that. And then there is no slab rate taxation that is applicable. So even if I make 1,000 rupees gain, I have to file my returns. So 194S is something that we already discussed. It is applicable only to residents. For non-residents, 194S is not applicable. So when I say non-resident, that is when you are a recipient. Now let us talk about a transaction where there is an Australian who is paying to an Indian. So whether Australian should deduct TDS, answer is yes. Because 194S says it could be any person paying any sum of money as a consideration to an Indian resident. So the seller is Indian resident, buyer could be anybody, but they have still deduct under 194S. How far is this practical? What happens if an Australian person doesn't deduct TDS? These are all the things that we have to wait and watch. Whenever we do payment to non-resident, 194S is not applicable, but 195 becomes applicable, where I will deduct TDS at 30% slab rate. So these are the things. I know that this is a session for 1 hour. So as much as possible I covered, but again, what I covered is just a tip of an iceberg. So maybe hundreds of questions that you may still have in your mind that may have gone unanswered. But if there are a couple of questions, we still have a few more minutes. I'll be more than happy to take those questions.
Participants are free to post their questions in the chat box. So feel free. If you believe that there are some of your questions still remaining unanswered. We'll take another 5 to 10 minutes for the feedback form. So please don't spam the chat. Come on, any questions? So looking ahead, Anvesh, what do you feel? On some occasions we say it is going to be really difficult for the government to identify, because only way that I feel that a transaction has happened in cryptos is when the money is credited to bank account. But then you mentioned about people may move to some safe tax havens and then maybe bring in here, but then untaxed profits of the previous year brought into India is exempt from tax. That rule is also there. Now in this slide, do you think the government will be successful in taxing from the word go, or will it be like work in progress for the next 2 to 3 years?
So now the government still not have understood how cryptos function.
Correct. Yeah.
So this is the first attempt of the government to bring crypto into taxation regime.
Okay.
But one thing that we have noticed that the crypto is going to be a game changer as far as black money is concerned.
Okay.
That is, now earlier days, if I were to sell my property, let us say for 1 crore rupees, and if I were to say 60 lakh I'll receive in bank and 40 lakh you have to offer me in cash. Now it was a very difficult task for me to hide this 40 lakh rupees, because no matter where I keep, I was always scared of income tax search, income tax raid, or some person coming and stealing my money and going. But cryptos have become an alternative for this black money aspect of it. So earlier, people would siphon their money outside India to Singapore or some other bank accounts, or Swiss bank account, where they would hide their money. Now, the people don't have to do all those things. All that they have to do is they have to open a crypto account and receive money in crypto, where nobody can say that it is your account and you have received this money, because people can always say that that is not my account. And there is no way on earth where you actually can prove that this money or this account belongs to you, unless, of course, you open this account with the help of exchanges. I'm pretty sure that if somebody were to receive, let's say 10 crore, 20 crore of bribe, he will not open an account with the help of an exchange. What he will do is he will open using some application. He is going to have an address to which he is going to receive all those money. And he doesn't even have to take it outside the country. The money is going to sit in his account itself. Now, you may say that it is going to be a very fluctuating one, so that 10 crore may come crashing to 1 lakh rupees also. But we have to understand that crypto has gone beyond fluctuation, and there are certain coins which we call it as the stable coins, the price of which will not change.
Okay.
For example, there is something called as Tether, or there are many other stable coins which simply the value of which is $1. So it is $1 today, it will be $1 even after 1 year. So it is very safe way for a person to keep his crores of rupees unaccounted with himself without worrying about any banks, any regulations, nothing. So we may see that a rampant increase in corruption, rampant increase in all these crime-related activities where people are offered with this anonymity. Having said that, can we block or can we ban these cryptocurrencies? I want to reiterate on the fact that it is a decentralized technology. That means nobody controls it. So unless you can control it, you can't ban it. It is simple as, can you ban oxygen? No, you can't, because it is not just one central tree where you actually can go and cut it. It is plant in everybody's house. So how many houses you are going to go and cut it? So even if you cut all the Indian trees, there are going to be so many trees outside India. So it is impossible for you to ban oxygen. Similarly, it is going to be impossible for you to ban cryptos. But yes, you can come up with the stringent rules where you may say that if we ever find out that you ever had this crypto, then we may imprison you for 7 years. So if you look into the crypto bill 2019, this particular clause was put in there saying that we will give you 6 months to liquidate all your crypto holdings. But even after 6 months, if you have it and we get to know that you have it, then your punishment may exceed up to 7 years. So government may scare people, but banning is not possible.
Okay. There is a question from Ananpai. I also have one. I will ask later. If cryptocurrency is invested by an NRI, whether it is taxable in India?
Now the question again comes is, see now we need to understand how this income tax functions. Entire income tax functions on the basis of jurisdiction, whether it is an Indian income or whether it is a global income. If the person is a resident, global income is taxable. If he is a non-resident, only Indian income is taxable. Now the question is, when you say it is an NRI who has put the money, question is where he was when he invested that money. Right. Was he in India? Was he outside India? If he is outside India, then you can safely assume that the asset is outside India. But if he has invested that when he is in India, then you can safely assume that it is an Indian investment.
Okay.
So if it is an NRI, if the money is outside India, invested outside India, sells outside India, no need to offer for tax in India.
Yeah. Okay. The basic residential status rules will become applicable.
Yes.
Okay. Now, once again, I don't know. Somehow, I am stuck with the definition of virtual digital asset.
Yes.
Not being Indian currency or foreign currency is what I'm looking at right now.
Yes.
Not being Indian currency not being Indian currency or foreign currency. Now, I believe there are 3 to 4 countries who have accepted cryptos as their legal tender. What happens then? Because it becomes a currency of a few countries now. So how can you tax cryptos?
Okay. So here, I just want to take you through some budget memo that we had, where they define what exactly is Indian currency and what exactly is a foreign currency.
Okay.
Merely because out of 200 countries, one country declares it as their official currency.
Okay.
It will not become a foreign currency for India. For India to recognize it as a foreign currency, Indian government, by way of notification, should recognize that currency as foreign currency. So merely because some countries accept it as their official currency does not make it a foreign currency for the purpose of definition.
Okay. Okay. All right. There's an interesting question. Taxation in crypto world. Your loss is your loss and your gain is government's gain. What's your opinion on this statement? That's a very intelligent question.
Now, again, why that they've done it?
So first of all, congratulations to Mallikarjun sir for thinking in those lines. Go ahead, Anish.
So now, I'll put it very simple. At the end of the day, nobody wants to pay tax. Now, if government says on income you pay tax, but I'll allow you to set off with the losses. As far as crypto is concerned, it is an easily creatable asset. I'll give an example.
Okay.
Say I have 1 acre of land and I sell this. I make 50 lakh rupees of profit. I also have another piece of land which I sell this. I make a loss of 10 lakh rupees. So now government understands that this land is something that I can't create. So I can't cook up this loss. So this loss has to be genuine. So government has a lot of checks and balances put in place where they prevent me or prohibit me from undervaluing my assets. So despite offering the products at its actual value, if I still incur losses, government is happy to say that you can set off this. But when I'm talking about cryptocurrency, this is an asset which I can create. So I have to just have one computer engineer with me who can simply float a crypto company where it is as simple as I'll only take one piece of paper and morning I will write the value is 5 lakh rupees and evening I'll write the value of this is 1 lakh rupees. So the loss is 4 lakh rupees. So if you are allowing this type of loss to be set off against your gain, everybody is going to do this. So that is where crypto assets which you can create on your own. Government says, no, we are not allowing you to set it off, nor we are allowing you to carry it forward. So that is something that if government could not understand how it functions, all government said is nothing doing, only gain you pay tax, till we understand how crypto actually functions.
Yes, any other question from the participants? Okay, there is a point made by Professor Ayush. He's saying e-Salvador approved Bitcoin as a legal tender. So if I go as a tourist, I go to e-Salvador and make payment in Bitcoin there. Will it considered as a transfer for taxable purpose?
So now the question is, okay, fine. I get this question. See, this is more to do with
very interesting. This I've been telling this to a lot of people, that budget was presented on February 1st, and interesting, all millennials are going to find ways to do something or the other in the next 2 months till it comes 1st of April.
So now what happens is, even if you go to any country, now again, I want to reiterate on the point, whether, let us say you want to be very transparent, you purchase something in India, you purchase that asset in India, Bitcoin you purchase when you were in India, it becomes Indian asset. It does not matter where you actually go and transfer it. It still is an Indian asset. Now, so even if you go there and declare it saying that I have transferred there, you have to offer tax in India on the gain that you have made.
But there is no paper trail. If it does make payment in Bitcoin in El Salvador, how will the Indian government know?
That is exactly what my point here is. So if you are an Indian resident, then the person who is accepting that, he is the person who is making payment to you for an Indian resident. He should follow 194S and he should deduct TDS only at 1%. Okay. But he is not going to do that because for all the practical reasons. So there is no way government is going to find out.
Correct.
But if your question is it taxable? Answer is yes.
Okay.
But whether they'll get to know, answer is no.
And whether you will pay tax, if you ask an Indian taxpayer, he will say no.
Yes.
That is also there. Okay, wonderful. Nice question, Ayush. Very nice. So any other thoughts? I think you might have seen Anvesh sir's email ID and his mobile number. You can connect with him on WhatsApp and get all your doubts clarified, as many as possible. There are a lot of things that, yes, that's his mobile number and his email ID. So feel free to connect with him and get all your doubts clarified from time to time. Possibly if your college is really interested in putting up any such, webinars pertaining to this particular topic and many other, especially GST, because CA Anvesh has a very beautiful way of putting GST across in the minds of all the people. So thank you, CA Anvesh, for being a wonderful speaker, sharing your knowledge on cryptocurrencies. And I should tell you, this isn't the last session that we are having. We are going to have many more in times to come, so that by the time the government gets clarity, there will be clarity for all of us as well at the same time. All right. Yes. Eva, over to you. We have Pashwanath Ajari sir also. We will speak.
Thank you, C. Anvesh. Thank you, Manoj sir, for the moderating. Can we have Professor Pashwanath Ajari to talk a few words?
Thank you, madam. Respected principal of Milagres College, Father Michael, the resource person of this afternoon, the Anvesh Shetty, the moderator of this session, Manoj Luis, the secretary of Mukta, and all the participants in this session. I really feel proud to be the part of this great session jointly organized by Milagres College and Mukta on crypto taxation. As it is very well known to everybody, the government had an envied eye over the crypto transactions for the past many years. And even it had gone to the extent of passing an order banning all the crypto transactions. And there had been a continuous fear in the minds of the crypto investors also. The budget of this 2022 has tried to give some answer to these apprehensions. We have to see to what extent the government will be able to implement its scheme properly, and to what extent people of India will accept crypto as their new currency. We have to wait and see. I congratulate the eminent resource person of this afternoon, CA Anvesh Shetty, for his wonderful presentation on various issues pertaining to the taxation of crypto. In fact, this kind of program was very much required for the members of Mukta. We are really grateful to you, sir. My special thanks are also due to the enthusiastic secretary of our Mukta, none other than Manoj Lewis, for his lead in organizing this kind of webinar and conducting this in a very nice manner. Very proud of you, Manoj.
Thank you, sir.
Thank you very much. Finally, I also appreciate the interest shown by all the participants who are really the real teachers who would like to know new things and pass it down to the students. Congratulate all the participants in this seminar also. I conclude my speech with these few words. Thank you.
Thank you, sir.
Thank you so much, sir. Now we have a very brief word of thanks.
Yeah, just may I request all the participants to please switch on your video so that I can take a picture for our record. Just quickly. Please hold on. I will just take a picture so that it goes as a record. Just 1 second, 1 second. There are quite a few participants. Just 1 second, hold on, please. I've just finished 2. Just 1 second. Finished 5. Another 3 more remaining. Yes, Eva, you can go ahead. Thank you. Thank you all. Thank you.
Vote of thanks by our HOD of Commerce, Mrs. Glancia Roch. So over to Glancia, ma'am.
Good evening to all. I deem it a great honor and privilege to propose the vote of thanks for this national webinar on crypto taxation. Let me first of all start by giving thanks and glory to the Almighty God for making this webinar a resounding success. First and foremost, I thank our resource person, CA Avanish Shetty, Chartered Accountant in Mangalore, who despite of his busy schedule has found time to contribute his knowledge on cryptocurrency, TDS, and answering our participants' questions. Thank you very much, sir.
Thank you, Anvesh.
I also express my heartfelt thanks to Professor Manoj Lewis, Secretary of Mukta, Mangalore, for moderating this session so well.
Thank you, ma'am. Thank you.
I thank Professor Pashwanath Ajre, President of Mukta, for your presence and for your valuable message. Thank you, sir.
Thank you.
I thank our Principal Reverend Father Michael Santumayer for his support, vision, and commitment. Thank you, Father. I thank our Vice Principal, Mr. Cassin Rodriguez, heads of various departments and faculties for their valuable contribution, guidance, and encouragement in all our efforts. Thank you. I thank all the distinguished invitees present here for accepting our invitation, and also to Ms. Eva Manorama for hosting this webinar so well. Finally, I leave you this inspiring quotes by Martin Luther King. An individual has not started living until he rises above the confines of his individualistic concerns to the broader concerns of all humanity. Once again, I thank you all for your attention. Thank you.
Thank you, Madam Glancia. Thank you very much.
Thank you, sir.
Eva, may I request you to please share the feedback form? Yes, may I request all the participants to please fill the feedback form. Only if you have filled, after that you can please leave the meeting. Our idea of doing this webinar is sharing knowledge. Getting a certificate is only something which is complimentary, that's all. So please don't, because I can see a few people feedback. Since 4 o'clock, our timing was very clear, 2:30, 2:45 to 4. We started 5 minutes late. So we have the liberty to finish 5 minutes late. But we are, I can say, still on time. Is the link shared? Yes, the feedback form link is shared. Please fill in the feedback form. Thank you, Malikarjuna sir from Davangere. Thanks to Manjunath sir for getting teachers from Davangere for this resourceful webinar. Thank you. Thank you. Those who would like to give an oral feedback, you are requested to unmute and you can give your feedback. Absolutely no problem. Please do so.
Manoj, I am here.
Yeah, Ravi sir, thank you very much for joining us all the way from Davangere. Ravi sir is the principal of Residential Government College. Ravi sir, please, your feedback, sir. You can switch on your video, we can give your feedback, sir.
Okay, folks.
So anyone wants to give feedback, you are free to unmute and you can give your feedback. By the time you are filling the... Eva, you can please share it once again because Harjinder Kaur ma'am is mentioning that the link is not visible.
Ma'am, sir, I've sent it thrice, but I'll send it once again.
Okay, it is saying link is not visible. It's visible to me.
Okay, wait.
I don't know how it is not visible to others. Okay. In the meantime, anyone can give a feedback? Anyone ready to give a feedback? Please wait, please wait. We'll make the link available to all.
So maybe she is directly sending it to you, not to everyone.
No, I think...
okay. Two, she has to select everyone.
Eva, you need to select it to everyone.
Yes, done.
Is it done? See, Anvesh, I think you can type your email, mobile number. Now I believe the feedback is visible. No?
No.
One second. Just 1 second, I will share it.
Now visible.
And I will bus.
Just try this. Just check whether it's a feedback form.
Sir, all have received it, sir. It is sent to everyone.
Okay.
Participants, please note the link will be open only for 10 minutes and the certificate will be issued to you within 1 week.
So please remain in the group until you get your certificates. Please don't leave. Yes, I believe all are filling the feedback form. Praveen sir, if you can listen to me, Ravi SP sir, if you can share your feedback, sir. So Anvesh, I think there will be a lot of events coming up on this particular topic.
Now, maybe on depending on the, I wish to have this kind of sessions in 2 sittings. In the first sitting, we only discuss about the asset. We discuss nothing about the taxation.
Okay.
And maybe after 2 days, we will again have only on the taxation, because I feel certainly though we have discussed all the nitty-gritties of the tax impact of it, sometimes if somebody is very new to this crypto universe, it becomes very interesting or challenging for them to understand what exactly is happening. So maybe we can spend an hour or 2 to understand this asset, because this asset is a huge class of asset. We will understand it practically, how it works and everything. I can take them on a tour, a digital tour on blockchain.
Okay.
And after which this thing, we can do all that.
Yeah, thanks. I think that we should think of it.